Knowing how to correctly read candlesticks helps you to understand the market, take more accurate trades, easily avoid a lot of losses that you would have taken otherwise, and ultimately will help you to stay on the right side of the market. Every candlestick tells you a story, and mastering them lets you read the market like a book. That's exactly what's going to happen in this class. Pretty much no candle will print the same as the previous. They're all going to be different in some way. But there are only really 3 types of candlestick. And when you understand this and understand what each one is, you'll have a much better understanding of the market. So the 3 types of candlestick are strength candles, control shift candles, and indecision candles. We're going to start by going through the strength candle. Now, to explain anything inside of this video, we need to preface by saying the market is a battle between buying and selling. When we're looking at candles, we are looking at market psychology. They tell us a story as to who is in control between the buyers and the sellers. When we see more buying taking place in a market, prices go up because the sellers can demand more dollars per unit of the assets that they have if there are more people who are demanding to buy and there are more willing buyers. More selling leads to lower prices because the buyers can demand more units per dollar. If lots of people are trying to sell an asset into a market, you can offer a lower price to one of them and someone is going to take it. This is really why markets go up and down, and the candlesticks are a direct reflection of this buying and selling battle that's taking place at all times. So remember this throughout the whole video. All we're doing here is trying to read this battle using candles. So getting into strength candles. If we have a candle that opens here and closes here with a large candle body and a small upper wick, this is the result of strong buying. This is a strength candle. And it indicates that right now, at the time of printing this candle, the buyers hold control over price in the market. The same is true for a bearish candle that opens here, closes here, has a large candle body and a small lower wick. This is the result of strong selling. We've seen uninterrupted selling, which has driven the market down over whatever specified period of time this candle is representing. It indicates that sellers, at this point in time, hold control over price in the market. So these strength candles always need to have small wicks and large candle bodies, because what we're seeing here is an uninterrupted phase of buying or selling where the resistance from buyers or sellers against the trend simply wasn't strong enough to slow the market down. And leading on from that, bullish candles with no upper wick and bearish candles with no lower wick, so just flat tops and flat bottoms like these, although they're reasonably rare in the market, when they do print, they are even stronger than little wicks, because they show no resistance from sellers or buyers against the larger move throughout the specified period of time. So if we see an hourly candle close completely bullish with absolutely no wick above, it gives us a very strong indication that the buyers are fully controlling this market right now. There is no resistance from sellers. And after a strength candle like this prints, you can assume there will generally be continued upside or downside, depending on if the candle was bullish or bearish. Now there will be pullbacks, and of course context matters, which we'll get into soon, but ultimately it shows control, leading to further moves in that direction in most cases. When we see these strength candles, we know 2 things. Number 1, we want to move with the strength. Number 2, we want to make sure that we don't trade against it. Very simple for getting good trades and avoiding bad ones. Now, when we're looking at strength candles, as with all candles, the size of the candle body matters too, okay? We have 4 examples here. All are showing uninterrupted buying, but the largest candle is by far going to be the strongest and the best indication that the buyers are in control. A very small candle body, even if there is no upper wick, doesn't show a massive amount of buying. Yes, it shows that there pretty much isn't any selling acting as resistance, but it's not showing a massive influx of buying in the same way that a very large candle is. So a candle body that is super small, like that weakest example there, it's not going to be the strongest for determining future trend directions, even though it does show some uninterrupted buying. The big candle, however, that's the kind of thing we want to see for high accuracy moves. This is because large candles show massive buying and smaller candles show a less aggressive wave of buying. The buyers are still in control at this point, but not in massive numbers. And obviously in a selling example, we just flip this on its head. Large bearish candles are the best to see. Smaller bearish candles aren't going to matter as much. One example of a strength candle that you've probably heard of before is the engulfing pattern. If a candle has engulfed multiple previous candles, it shows a takeover in control from buyers or sellers. So in this example here, we can see that 4 bullish candles were engulfed by 1 bearish candle. Obviously, this bearish candle is what we call the strength candle. And we've seen some small buying pressure, but then a massive takeover in control from sellers. And in this time period, sellers have achieved more in 1 candle than it took buyers to achieve in 4 times the time, okay? 4 times the amount of candles. So if we were on an hourly chart here, we see 4 hours of bullish price action reversed in 1 single hour, showing clear control from the sellers, seller strength, and therefore opening the doors to new downside trades or selling opportunities. So to round up the foundations of strength candles, a strength candle shows clear control from either buyers or sellers in a market. Larger bodies with small or no wicks show uninterrupted buying or selling pressure, and that is exactly what we want to see. And this gives us an insight into where the market is likely to move next. A strength candle on the bullish side will potentially lead into further upside, and a strength candle on the bearish side will potentially lead into lower prices or selling opportunities. We're going to bring this into context shortly after we've looked at these next 2 candles. So now let's move on to control shifts. So a control shift candle shows a takeover in control or a reversal happening in real time. As we've said, wicks show rejected price action. So a candle with a large wick on the upside shows an attempt to go higher, totally reversed by sellers. The opposite is true with large downside wicks for a market where buyers are taking control over sellers. So here's an example of how a control shift candle forms and what it means in real time. The candle opens here. We see a drive to the upside, which is strong buyers taking price higher. But then we start to see sellers taking control of the market. And before the candle closes, we see the sellers reverse all of the buying attempts, taking the market back down to close around where it opened. This large upside wick is showing in real time the buyers losing control of the market to the sellers, therefore hinting at a reversal and giving us valuable information that we can potentially use for future selling trades. And everything is exactly the same, but with a large lower wick instead of upper for the case of a reversal from selling to buying. Now, in terms of the candle body, it really doesn't matter if the candle closes bullish or bearish. So whether it's red or green or blue and gray in my instance, it doesn't matter because it's the wick that tells the story. And just to show you, the scenario is identical for bullish control takeovers, but it's reversed, okay? So large downside wicks is what's telling the story here of sellers losing control to buyers. Once again, the candle body color doesn't matter. It's the wick that gives us the information. Now, the candlestick pattern that you might have seen, this is very basic information, is a pin bar. And a candle that closes like this is what we call a pin bar. They can be very strong in the right context, but you need to weave in the context, which we are going to cover very soon. But just so you know, the pin bars are pretty much control shift candles, okay? It's just the name that I literally gave it to for this video to explain what it is that pin bars are actually showing you. The most important part about each of these candlesticks, including pin bars, as well as the engulfing that we showed you before, is that rather than looking at it as just a pattern, you want to consider what the market is actually telling you with that battle between buyers and sellers. This is where the valuable information can be found. So with pin bars or control shift candles, the generalized idea is to buy when we see bullish control shift and sell when we see a bearish control shift. Context matters and it will be covered very soon. So to round these up for now, a control shift candle is the first indication that buyers or sellers are claiming control over the leading party in real time. So a bearish control shift candle is where we see sellers taking the market from buyers. And a bullish control shift candle is where we see the buyers taking control of the market from the sellers. The large upper or lower wick tells us this story and we can use it to determine reversals ahead of time. Now, one important note, it has to be a large wick one side. If there is a considerably large wick either side of the market, so both sides, this is what we call indecision, where there is no party in control. And that's what we're going to cover just now. Indecision candles tell us that no one is currently in control and that buying and selling is equally weighted. So contrary to the other versions we've looked at where we're looking at strength or reversals, indecision is simply where nothing is currently happening. An indecision candle looks like this. You might know it as a doji, okay? We have equal wicks either side or relatively equal wicks and an open and close price that is near together. So we haven't made much movement. We've attempted to go higher, attempted to go lower, but ended up closing around where we opened. Now here's a run through of what a indecision candle may form like. The candle opens here. Buyers attempt to push the market higher. Sellers reverse this attempt. Sellers then attempt lower pricing, but eventually the market ends up closing near the open price. So what we've seen is an equal attempt from buying and an equal attempt from selling without really any movement being made. It's simply a state of pure indecision in the market. No one is in control. Buyers and sellers are equal. Now, when we're looking at indecision candles in a market, they are not always going to look exactly the same. These are some different forms of indecision candles that you will see. Sometimes they will have a small candle body. Sometimes they will have a slightly larger candle body. Sometimes the wicks will be really long. Sometimes they'll be short. All in all, though, what we're looking for is a candle that opens and closes near to itself with a wick either side showing attempts to go higher, attempts to go lower, and complete failure and indecision from one direction or the other. Now, how do we actually trade indecision? Well, we cannot directly trade it because it doesn't tell us who's in control, right? We want to be on the right side of the market. If buyers aren't in control and sellers aren't in control, then we can't directly trade that candle. But we can use indecision candles for trades once the market creates clear direction. So for example, if we have an indecision candle, which shows no control by either party, and then the market breaks out of that range, we can use the pullback to buy or sell in line with whichever direction has taken control, whether that's buying or selling. And also one of its primary use cases is to be used to gauge the likelihood of reversals when it prints in points of interest like supply zones or demand zones. So here we see a collection of different candles, which shows after this selling move, the sellers have lost control. This itself doesn't confirm a trade. We would generally want to see something like a bullish engulfing to confirm that the buyers did indeed take control. But the indecision is the first sign that the market is indeed slowing down. So it's a good place to start prepping buys and keeping in mind that this bias may shift now that we've seen a complete slowdown in momentum. So to round up indecision, it's not directly tradable as it doesn't give us clear direction from buyers or sellers, but instead it is used for gauging reversals and also taking trades from the point where one party finds control.